Let me also welcome on board Gurmeet Chadha too and find out what he's making of the market right now. Gurmeet, hi, afternoon. Is the market in any mood to rest? Because it really seems a one-way street up since Wednesday post the verdict.
Well, it always seems like that, and actually when the markets are going up, the risk is actually going up. And when it's falling like it did on 4th of June and other days is actually when. So you got to be selective. I think it's easy to get carried away. I think market is trying to build in budget expectations. So if you see some of the rural economy, some of the consumption stocks are going up, the housing finance companies are going up, and the economy facing stocks are making a comeback after the correction we saw post elections, whether it's railway stocks or the defense stocks, they're again back to after correcting 20-30%. So I'm just saying you've got to be a little selective now. And I think probably need to temper down expectations a bit. That's the only risk in the market. Rest, I think India's story is solid.
Your story is clearly solid. But Gurmeet, just wanted your specific take if you track the telecom sector and Vodafone and Indus Tower closely, because that's the news that the stocks are reacting to. In fact, Vodafone Idea right now is up 4.5%, and that because this news of $2.3 billion worth of stake sale, I think it could help Vodafone to a large extent because, of course, the debt is way too high, but they have been converting part of the vendor dues, and this $2.3 billion will surely go a long way after the kind of fundraise that they have done. Though, of course, Indus Tower is reacting negatively because of the increased supply. But what do you make of the future for Vodafone Idea, if anything?
No, I think one thing the market is not trying to price in is that it will survive. And I think the first worry was that whether it will survive or not. I think the bigger worry from an investor point of view would be how quickly it can build network, how quickly it can win back the lost market share. They've lost more than 21 crore subscribers since the merger, and they continue to bleed every quarter. Second, if you see the debt levels, their EBIT is currently at about 12,000 crores, and the debt servicing is 3x of that. So I think, you probably need more capital and all, on fundraise, you can then, leverage more and take more capital. So it's going to be a long haul. And at some point of time, there could be some equity dilution as the debt, the delayed spectrum payments approach maturity early next year. So I'm more happy playing it through Bharti, to be honest. I think it's clearly on track. The, the mobility business continues to do well. It continues to add the highest 5G additions quarter on quarter, industry-leading ARPU. The home and the broadband business also continues to do well. And I think it's got re-rated. And for the first time, I'm seeing 15,000 crores of free cash flows in Bharti after adjusting for all the debt payments, which means there'll be a very good financial leverage as well, other than operating leverage due to ARPU increase. So I think it's a more steady play. I agree, Vodafone probably the risk reward is higher, but I would still avoid.
Okay, that's a clear avoid coming in for Vodafone Idea at least. But Gurmeet, again, what about names like ABP Siemens? They're almost like Trent. I don't think valuations is a parameter that you even judge them with.
No, it's difficult to put incremental money in these pockets, Aisha. And so ABB is 50 times EV by EBITDA, 80, 90 times earnings. I know probably the next 4 5 year order book is probably in the price. Same is the name case for Siemens and some of the defense names where you're probably factoring in most of the order book for next 3 4 years. So any rise in commodity prices, any pullback in the orders, right now I don't think the market is factoring anything of that. So while we have a lot of cap goods and infra plays, but I don't think so. Incrementally, you can still add some PSUs like NTPC is still at about 18 times. Power is we are power deficit. We'll continue to add more, both thermal as there will be a spin-off of the renewable business. Power Grid is another one which is at about 18 times earnings, 5-6% dividend yield. So those are some pockets. There are a couple of railway ancillaries where probably still we see good margin expansion, and it's got to be, as I said, very selective now. And as I said, temper down. I think the worry is that people are getting used to this 30-40% returns, which we know and history tells us are not sustainable year after year.
Point taken. The other important talking point for the market is the big action of late that we have been seeing in the primary market and through, of course, those block deals, etc. as well. A lot of Ps again making time while the sun shines per se, because making hay while the sun shines, because they have been booking out profits of a lot of companies. And talking about booking profits, looks like Vodafone Idea is also going on the same path. But in the meantime, Hyundai's IPO is likely to hit the street very soon. In fact, today they would be filing the papers with SEBI. That's the exclusive story that Anurag Joshi, my colleague, has picked up. Let me take it across to him to find more details on this one. Anurag?
Likely to file is draft red herring prospectus with the Securities and Exchange Board of India as early as today. Now, this is one of the most coveted IPOs for 2024, and it is coming at a time when there is a surge in the pace of IPOs in the country. And we've had two recent IPOs, including Ixigo and also Office. Hyundai Motor India IPO, the size is estimated at around at least $2.5 billion. So if this IPO is successful, it will be in the league of what LIC had done in 2021. It's one of the biggest IPOs, and Hyundai itself is one of the oldest foreign automakers in India. Hyundai started business in India in 1996, and at a time when Maruti was probably the only automaker during the 90s, it came in and it launched brands such as Santro and Alto. So this is an IPO the market will be watching out for.
What's your take with about this latest IPO? Of course, Ola might happen soon as well. If you have studied it, what are your initial views on it? And if not, nonetheless, what's the view on the auto sector?
No, I think I'm very constructive. I think it's going to be one of the largest IPO, and there's a potential to re-rate the entire auto value chain. What has happened is, Anisha, is that if you see, the entire world has been on EV. And only after Toyota did a study on that hybrid could be the future is when people have realized that you need ICE parts also. So China was a hub, it's moved to EV. Europe has its own set of problems, supply chain, and Ukraine is another strong country which was on ICE auto anks, which is obviously undergoing warlike conditions. So Indian auto ancillaries, there's hardly been any capex done on, let's say, fabrication, let's say forgings, etc. And a lot of the IC parts. And I think a lot of companies may make a comeback. One of them, which has done recently very well, and we continue to hold for a very long time, is Uno Minda, which is both, it's a nice mix of content, convenience, as well as the EV portfolio in the car. And then you have Sandhar Technologies, which actually makes the frame and the locks for two-wheelers, and then it's moving into EV portfolio, getting into fabrication, etc. And there are many more, a lot of forging companies, fabrication companies. So I think that one space could see some, beautiful operating leverage because there's hardly any capex there. So we are constructive there on the entire value chain, and also look at some of the two-wheeler names and farm equipment plays as government gives little bit more to the rural economy. There is still some distress there, which was evident in the poll outcome in key states, and there are state elections coming up in Maharashtra, in Haryana, in few more states. So there will be more focus on the agri side as well, which augurs well for even two-wheeler companies.
Just want to mark what the European markets are up to, because we clearly seem to be following a completely different tide altogether. We're down almost 1% for the DAX. The FTSE, of course, is more just mildly soft, but it's a solid almost 2% cut coming in for CAC. FTSE MIB is now around 600 points, and that's a good 2% fall. And even the Europe futures are not really indicating the best of starts. We're down 250 points in the Dow futures already. Nasdaq and S&P still a little bit quiet, but trailing in the red for sure. That said, Gurmeet, you were talking about as to how the markets are already building in the budget expectations. What are the expectations from the market for the budget this time?
So, I think the focus would be rural and urban poor and people who are, still struggling. Already, if you see, the housing finance companies have ramped up in anticipation, there will be more housing announcements. Just look at Home First, look at Avas, look at, Shriram. of the world. Bajaj is coming up with a housing IPO soon. So there's a run up there. There is some expectation building up in the consumer names and the rural focused names. We've seen a bit of a recovery even in agrochemicals from where they were, let's say, about a month back. So I think market is trying to build that up, and that's why I'm saying you got to be see how much good news the budget can carry. But government has more space. The fiscal deficit is 20 bips lower. Also, the RBI dividend, so they have a little bit of elbow room to do both capex and investments, and be a little more populist and be more rural facing. Having said that, one development which I'm watching outside budget is can the gas come under GST, and I think that would be a big re-rating for the entire gas value chain. And a lot of these states which are gas producers, which is AP, UP, Rajasthan, etc., they are mostly NDA states. And if they can get gas in the GST, there could be input credit for the companies on the value chain, and the effective taxation also comes down a bit. So want to see that what would be the slab rate and also that's one interesting space. And those companies haven't really moved much, whether it is producers like GAIL, whether it is some of the the gas distribution, city gas distributors, etc. So that's one space I'm keeping a close watch.
Then we'll ad lib. Right, okay. That's the take coming in on the markets right now. Balrampur Chini, that's of course one stock which has been lower in trade today. Oracle Finance, Emphasis, they're all seeing some weakness coming in. And yeah, of course, IT as a pack is definitely being weighing heavy on the market. Gurmeet, is IT a clear avoid, barring those sporadic moves that we see, or is there some meat in investing right now in the IT pack?
No, it's never clearly avoid. You don't know what goes up, right? Market, the cycles have shortened. I think people have written off pharma and banks also at some point of time when interest rates were going up. And we've seen people have written off PSUs a couple of years back. Who would have thought that the market cap of PSUs will go up from $200 billion to more than $600 billion? For the entire space, some of them have gone up 5x. So never write it off. And I think valuations are reasonable in some of the large names like HCL Tech, even a bit of Tech Mahindra with new leadership coming in. But I think the focus has to shift from services to more products, software, and platforms. And I think so a lot of small IT companies, like KPIT, which specialize in CASE, which is connected, autonomous, shared electric, which is, the auto software, if I were to club that. Some niche names more, I think, is where we are focusing more. HCL is doing very well on the software side. I don't think so. The market is capturing the work they are doing. It's a 25% plus EBIT business for them. Currently, it's clubbed in the main company right now. And then you have, these platform plays like Zomato and Policy Bazaars, etc. of the world, which I think have great potential the way it's scaling up. So I think you need to have a combination of, ARDs, software business and platform business with IT, and maybe a little less on services for a couple of quarters. Once US recovers, maybe even services may look good.
For now, find those niche IT plays and not just those services companies, and maybe ER&D is still something which is quite positive. I wanted to bring back the focus to the auto space and especially M&M, because that's managed to top Tata Motors market capitalization and has gone ahead of that. It's now the second most valued auto company in the country, and we just had those exclusive information also coming in from the Mahindra Investor Day, which is underway, wherein Mahindra is likely to start the production of three new models between October to November 2024, and Mahindra XUV, E8 and E9 to be launched in India by Jan 2025. Kunal, what's the view on M&M as a chart? Because it's been doing very well of late, and today, of course, it's at record high level. Time to book some money out or just continue to be with it?
I think continue to be with it. The charts have been very strong. M&M had been one of the top leaders, I think, from the auto pack when it started the rally from, I think, 750, 800 mark. Mid 2022, and I think from there the stock has just moved on, strength after strength. Even in the last few months, there has been hardly any major patch of price correction for the stock. But the stock has gone through those sideways ranges for quite some time. So I think that generally has neutralized indicators for M&M, and I think that's why the indicators are nowhere near the overbought territory, at least on the monthly charts for M&M. And I think that's where I would probably believe that the stock should inch up higher. 3,000 could be a strong psychological target for the stock over the near term.
Right, okay, that's the take coming in on M&M right now. Has scaled a fresh peak for itself today too. And actually, overtaken Tata Motors also in terms of its market cap. But what's the dealing room chatter like? Sharad is here from with all the buzz from the dealing rooms.
Well, yes, in focus is Aditya Birla Capital, and what we are gathering from dealers is that there might be a block likely next week. Now, interestingly, the company is expected to meet certain FIs in an investor conference in Singapore between 18 to 19 June as well. Now, FIs have roughly 11.8% stake in the company. Of course, the numbers recently had come, Q4 numbers, they were largely mixed set of numbers, but the street is factoring in something which is important, which is the recent stake sale in the AMC that's expected to boost the capital further by almost 650 crore rupees. And two important things coming as guidance from the management. The first one being that the NBFC business is expected to grow at a 23% CAGR from FY24 to FY26, and also the higher AUM growth is expected in the housing finance business as well. So a lot of positive triggers coming in for the stock, and that's what we are gathering from the dealers, is that there might be a block deal next week.
That block deal in the coming week as well. Thanks, Sharad. But in the meantime, let's take some BTST idea from Kunal. Kunal, anything on the BTST radar or STBT?
Yeah, BTST. So two ideas over there. First one is one Federal Bank. That's a chart which has come back into a breakout mode. Again around the 174 plus mark. So would suggest a target of 183. Stop loss at 167. And Balrampur Chini stock, which is actually down 2.5% today. Go for a contra buy over here at current levels. Look out for targets of 445. Stop loss at 418.
Right, okay, that's the take coming in on some of those BTST names. Gurmeet, then what's the strategy really as we approach closer to the budget, which should hopefully be around next month, last week perhaps, or at least latter part of next month? Do nothing, just sit tight?
I think to a large part, yes. I think just enjoy sometimes. It's good to enjoy the games and be happy about it. And wait for bargains. Days like 4 June come, once in a while. But last 40 years, if you see, every year there's been a 10% correction. And I think India remains a buy on dip. So be selective. There's no harm in being a little counter-cyclical, going towards names where probably a lot of bad news is in the price, and maybe rebalance the portfolio a little bit. I think wherever you have made 4, 5x in, let's say, PSUs, railway, defense name, I'm not asking them you to exit, but take some money off, get into, let's say, something like banks. So if you see banks, 25% EPS growth, but because of FI selling, now Nifty is only 13-14% up for last 2 years versus Nifty above 20%. So there's some catch up there. And as and when FI has returned, they will at some point of time, there will be some bit of catch up there. And as I said, bit of agrochemical names, maybe deep dive a little more into IT and pharma. Have a little counter-cyclical portfolio, something which is out of favor. And also look at bonds. I've been saying this for last 6 months. The 10-year bond is now down to 7. It was 720 a quarter back. You will see a shallow rate cut cycle in next 12 months, which means even a bond portfolio can deliver double-digit return. So be a little more balanced and as I said earlier, temper down the return expectations.
Kunal,
Talking
is there a possibility, Kunal, that there could be a long stretch of consolidation which could perhaps last a month, or is it too early to say that right now?
No, I think that should not happen because given the global context where the global markets are, I would believe that the markets should continue to trend up. We've discussed many factors, the VIX, etc., and I think that should also aid to the market rally. So maybe consolidation could be defined in a different manner this time around. Maybe not a 1% band for the index, but it could be a broad-based consolidation. So we could be looking at a 600 to 800 point range for the index at 23,800 as a fresh resistance on the upside and closer to 23,000 as a fresh base.
Okay, point taken. Just wanted to kind of hash out that point of counter-cyclicals with Gurmeet a bit. Gurmeet, would insurance fit in that definition as well? Has been in a lot of those regulatory challenges, that surrender value issue was there. But now everything, at least for the time being, seems to be out and known. Would you buy insurance? Because take a look at LIC today. Finally, that elephant is dancing, 6% move today.
No, I think there is some valuation comfort in LIC. It's still less than embedded value. It's almost around the IPO price. It's just that the new business premium and the new business premium margin has been slightly lesser. They probably need to have a more diversified portfolio. HDFC Life also from highs of, let's say, 750 plus is still sub 600. It has one of the best metrics both in terms of the new business premium as well as the persistency ratio, which is policy crossing 3 years and 5 years, because insurance is a long gestation product. So maybe tactically it may make sense, but I am more constructive on capital marketplace. The broking names like the Angel or the Motilal Oswals of the world, the CAMS and the CDSLs, which is the RTA and the depository, some of the exchanges. Because here, if you see, we've just touched probably 10 crore unique customers. We have just about 4 crore unique SIP holders. I think this number is only going to go. For me, that's like a 5-year, 10-year, fill it, shut it, forget it kind of a play. And most cases, there is a duopoly, whether it's a depository, whether it's, the RTAs. So, which means that, it makes more. So, I'm more focused there on non-financials than on insurance. I like some non-life insurers like ICICI Lombard, etc. But life insurance, we have very, very little exposure.
Take there as far as insurance is concerned, but perhaps some capital market plays are better placed. On that note, Gurmeet, we let you go. Thanks so much for making time and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.